Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we have no major change on the larger time frame as we continue this week trading within the not late, but the spike lower that we had on Friday. We are trading within that move. So basically, we're finding some short-term balance within that extension, but it's difficult. At the moment, we are right in the middle or around the middle of the intermediate term range. So we have some excess at the bottom, and today we had an early continuation given by the open location from Monday's late rally, but that was a little bit under pressure, and we ended up overlapping with Monday. So I would say that the market is in short-term balance. It's very difficult to call the direction right now, but the move lower we saw on Friday is pretty much still in play. It has not been rejected as of yet. If we look at the market profile, as you would expect on a balancing market or a market in a short-term balance, you have conflicting signals from both sides of the market. First of all, I will talk about the forces to the downside. We had a gap opening in a very interesting location, which is close to the 2900 area. That would be an important location because that's the area where we broke from on Friday, and you can see that the single print started there. So this morning gap pushed up, but it was unable to close that double distribution. That's an important clue, because after that event and you had a strong rejection in this area, it trended down for most of the morning until some support was found way lower. So it immediately pushed down, and you can see that in the C period it closed the gap that we had in place. But then when there was an attempt to buy from that gap, it kept a double distribution and pushed lower. Once you have this strong push inside, it accelerated to the downside. So important clues to the downside. We closed the gap immediately. We left a healthy excess at the top. We only left 2 ticks excess at the low of the day, which is a very questionable low. And the other thing is that, as you may remember, on Monday we had a late spike. Well, that late spike, the continuation was rejected, and we did find acceptance by judging by this double and even triple TPOs below the base of that spike. So all of that are data points to the downside. Now, to the upside, we can say that although you build acceptance below the spike base, you could not sustain, and you didn't find continuation down here. Could have been an inventory imbalance. It's difficult to say, but the market returned very quickly back into Monday's value area, which was also coinciding with the overnight. So it returned back into overnight and built further acceptance there. So to the upside, what we have to the upside is that you couldn't find continuation and further acceptance below that late spike. Although you had 3 distributions, the separation of those distributions is very questionable, because the upper distribution had only 2 ticks separation, and the late third distribution attempted to close and only left as well 2 tick separation. So this is a very vulnerable structure going to the upside. If we start getting a bid, the likelihood is that we will close both of those and keep going further. Of course, that needs to happen. You can see the strong rejection, people betting on the sell, the bears. When they saw this, there was a confluence, because you had here the halfback from Friday, you had the settlement yesterday, and you had the overnight halfback as well. So if someone was going to sell towards the end of the session, this spike, this cover and rally, was the perfect opportunity, and this location obviously was prime because it had the protection of all those references. So they sold the market from there, but at the end of the day, you ended up with overlapping value. So as you can see here, you have 3 days with overlapping value, which effectively are accepting the move lower that we saw on Friday. So what do we have in the bigger picture? In the bigger picture, we had a rejection of the 2840 area, left a very healthy daily excess, and there was a bounce in process, but that bounce went a little bit too far, and now we rejected from the border of the short-term balance where we broke from on Friday. So we have rejection here, and market balancing here. Where do we go now? Difficult to say. We're in the middle of the intermediate term range, but we have some important areas to monitor. One of them, of course, is that questionable low that we left today. It has a technical excess, which is 2 ticks, but 2 ticks, is not a very meaningful excess. So if we start getting acceptance within, I would say underneath this this push that we saw on the I period, which is actually where the market closed around 66. If you start getting acceptance below 66, I would say that this low will pretty much get into play and you have a likelihood of running it over. To the upside, obviously, if you get acceptance above the L high at 81.75, that will denote change and that will increase the odds of further test upwards. Anything in the middle is further consolidation within the 3-day balancing range, and I would try to stay away of opening or committing in positions in that area because it is very difficult to call the directional market right now. What I would say is the move has been validated. There's this excess at the bottom which was confirmed today, but that confirmation and that attempt higher was quickly rejected. So I would say that if we don't start going back up and filling these double distributions, I think the odds are slightly tilted to the downside, but we need to wait for more information before saying something for real. So focus for the morning, value development relative to these key areas. Focus on the L high and the 66 area, below the 66 area.